Research is the cornerstone of every industry, and in the world of finance, it is crucial for success. Accurately identifying the right companies to invest in takes time and a collaborative approach. It involves precisely analyzing the many facets of a business and the global marketplace, and looking at it as a whole in order to make an unbiased and favorable decision. The discipline is reserved for some of the most astute financial experts.
We have a few key hallmarks to our discipline. The first is we're looking to identify companies that we think are meaningfully disconnected from what we believe a fair valuation for them would be in the marketplace based on their fundamentals and how we anticipate them playing out. And oftentimes this involves making some kind of a non-consensus call on the company in question and how you anticipate it developing. When investors engage in the business of making non-consensus calls, sometimes they're just a little bit against the grain, and sometimes they're out and out contrarian. We're more the former than the latter, a little bit against the grain, things that people aren't necessarily looking at, as opposed to looking at really messy, distressed situations where if a number of things go right that one doesn't have great visibility towards, then you can make some money.
Some firms are taking the classic philosophy and moving away from the noise of Wall Street. At Cambiar Investors, a research-driven firm in Denver, Colorado, the focus on strategizing is palpable and due largely to the fact that these analysts are separated from the daily grind and gossip plaguing Wall Street.
When you have a very big flotilla of analysts scouring the world, just coordinating their different ideas and deciding which one should go in the portfolio and which one shouldn't is a very, very difficult task. And to prove that point, there's fairly overwhelming amount of academic finance evidence that more concentrated portfolio managers tend to do better in the long run. It's a fewer eggs in the basket and watching it closely. And I would likewise say that investment managers that have a moderate number of analysts that are well seasoned and focused and can communicate well with each other are probably more likely to be able to outperform than those with hundreds of analysts out in the field. It's not because those big firms have people that are not smart or not working hard. It's a coordination and communications challenge that they face.
Frankly, being out of a major financial center like New York or London allows us to really think for ourselves, and we don't get caught up in the conventional wisdom, otherwise known as groupthink. We pride ourselves in being very opinionated, in a sense, and having a unique opinion when we invest.
When it comes to investment management, no decision should be made without substantiated information. As more financial experts see the value in this philosophy, a growing number of shrewd investors will follow suit.
Relative value investing is perhaps best understood by contrasting it to classic value investing. In classic value investing, what one does is you determine the intrinsic value of a company using what's called a discounted cash flow, or DCF for short, analysis. Academically, that is the definition of how to value a company, is to look at their discounted cash flows back to the present. But unfortunately, there's a lot of subjectivity in that process. You need to make projections of future cash flows. You need to take an educated guess as to what that discount rate will be, and ultimately our view is it's false objectivity because there's so much subjectivity baked in. So where relative value differs is we'll still make projections about the business and its future, but what we like to do is look at long-term valuation trends and therefore use market-based valuation signals to help guide us as to where a company may be attractively valued and what its potential might be based on a constructive assessment of the company's fundamentals. And what's neat, for lack of a better term, about relative value investing is it helps you get to the right answer quickly during times of stress or during periods where it's difficult to put the numbers together with a high degree of precision.
Relative value here at Cambiar, we've set up our process and our philosophy around seeking to identify attractive businesses that are trading toward the low end of their long-term valuation range. What's important is to identify a good situation first. We're looking for good companies, good situations that happen to be trading inexpensively versus simply going to the inexpensive companies first and looking to explain away the situation from there. We use GAAP financial metrics to do our valuation work here at Cambiar, and in general, what's worked about relative value through various market cycles and through time is that we're employing market-based valuation signals to derive our valuation conclusions around entry and exit into positions. So companies with a long enough trading and operating history tend to both bottom and peak at very identifiable levels on certain valuation metrics, and we're looking to let the market guide us in terms of where we should be entering and exiting those specific positions, again, around attractive businesses and good situations first.
Headquartered in Denver, Colorado, Cambiar Investors takes a research-driven and in-depth approach to portfolio management. With a team of 10 analysts, each member delves into different sectors of the market and reports their findings. This efficient flow of information translates into collective and decisive investment decisions.
We have an analyst-led process, and each analyst is an expert in their field and is always culling ideas and trying to narrow down ideas to put these names in the portfolio. And we're always trying to interact with each other to try to understand what each other's thinking about the names that are going into the portfolio, that are already in the portfolio. And the fact that we're a small, very cohesive team on one floor allows us to do that pretty consistently throughout the day.
Everyone has an expertise, and that's important here at Cambiar. Analysts have followed their sectors for very long periods of time. We don't rotate sectors here at the firm. We focus on deep knowledge, developing a deep, medium, and long-term industry view. Where is value accruing and where is it eroding through time, and which companies are best positioned to capitalize on those dynamics. First and foremost, here at Cambiar, when we're looking at a stock, we're trying to identify, is this a high-quality business as evidenced by their long-term operating and financial results? Is there discernible value creation and capital discipline evident in that business over extended periods of time? From there, when we've identified the good business, we're looking for relative valuation support. Is this a good company that happens to be inexpensive, trading down toward the lower end of its long-term valuation range? And from there, is there a path out of that? Is there a normalization of the underlying financial and operating results that are going to lead to a better valuation of that business as those dynamics move forward? We're specifically implementing a relative value process here around a very high hurdle rate. We're looking for situations down toward that lower end that have substantial upside potential to the extent these dynamics play out in a favorable way.
I think the key to understanding the portfolios at Cambiar is to know that there are not a lot of stocks. They're fairly concentrated portfolios. We have 40 to 50 names in our international portfolio. We have 35 to 45 names in our large cap domestic portfolio, and 45 to 55 names in our small cap portfolio. So there aren't a lot of bullets, so to speak, when you're looking at putting stocks in the portfolio. So we really can be picky in that regard. We can have only a few names that have that kind of return potential and use them in the portfolio.
Qualifying for their portfolios is more than a goal. It is an absolute necessity because Cambiar is 100% employee-owned. The success of this firm is directly related to how well they manage client funds. Key to their qualification method is the ability to identify the most desirable companies to invest in.
Our analysts spend a lot of time out in the field, meeting with companies, going to trade shows and conferences, and basically being knowledgeable experts in their respective sectors. And that means knowing their companies well, knowing what the major trends are, knowing who benefits from those trends, knowing who is potentially on the wrong side of those trends. I would tell you that anecdotally, if you took a particular industry, it doesn't matter which one, whether it's technology, retailing, healthcare, you name it, and you took 10 companies in that industry, there'll be a more expensively valued half and a less expensively valued half. Probably the number one company in terms of valuation has great prospects. Probably the number 10 company in terms of valuation has inferior prospects. And neither of those companies are terribly interesting for us. But there's probably one or two companies in that bottom half that shouldn't be there. And there's probably one or two companies in that top half that also shouldn't be there. And it's the process of identifying those companies that are a little bit compressed in their valuation and inappropriately so. That's really what we're typically looking for in terms of valuation opportunity.
In order to put this principle in use, investors must be patient and commit to a long-term strategy in order to see favorable results.
What I do think distinguishes our process and has made it successful through time is a real adherence and consistency to our process. It sounds simplistic to say in many contexts, but patience and discipline are really lacking in today's capital markets. And here at Cambiar, we take those virtues quite seriously, and they're really at the heart of our relative investing here at the firm.
We started out life as a company that just did one discipline, which was a value-biased core approach to investing in medium to large-size companies. In the last 10 years, what we've endeavored to do is to take that core discipline and expand upon it to address what we think are the logical capitalization classes that our business can look at. Our goal is not to be a supermarket and to run 50 or 70 different funds and strategies. We think there's diminishing returns to that. We do a few things well, we know how to do them well, and it's a very research and analyst-led firm in terms of the process and the temperament and so forth. I think for myself and for most of the other professionals here at Cambiar, there's an opportunity that we all see. And that opportunity is to build a firm that can be a major firm nationally in terms of assets under management and influence over the pricing of stocks and the cost of capital for businesses.
Lucrative strategies in the world of finance requires the most experienced investment team. Cambiar Investors strives to be on the leading edge of the industry, and their goal is to continue to take clients to new heights of investment success. For more information, please contact a Cambiar representative.